So when we think about a financial model, we like to start with what are your major objectives? And I am a really big believer in setting up milestone budgeting. So when you sit down to create a budget, if you're a company that just is receiving funding and has no revenue, one of the things you really need to think about is, what do I want to achieve with the funding that I receive? And every time you do a round, you need to have milestone objectives associated with that. So if you're raising a seed round, and your seed round is somewhere between $750,000 and $2 million, you need to have a very good understanding of what are you going to accomplish with that money? What are the milestones that you want to achieve? Every time you do a round, you want to have that same dialogue. That does a couple different things. First of all, if you have achieved different milestones, that is going to increase your valuation. So it's going to make it much easier for you to receive your next round of funding at a potentially higher valuation. For example, if you come in, you raise a seed round, or you raise convertible debt, and you raise $1 million. It's important that you're going to be able to show something with that $1 million. Perhaps you're a SaaS company, and it's creating a beta of your software. Perhaps it's getting your first couple customers up and running. Perhaps it's building out key pieces of your infrastructure or testing out some of your key assumptions. But each time you do a raise, you want to ensure that you're going to hit certain milestones with that. If you're a later stage company, if you've already raised some money, you already have some traction, maybe you already have revenue, you still want to think about your budget and your financial plan in terms of what are your key objectives. So if you've been around for a few years, you've got positive cash flow, but you're sitting down to do a budget, you want to start out with, what are the top line objectives that we're thinking about? Maybe it's expanding into different markets. Maybe it's getting outside of North America. Maybe it's developing into different segments. Maybe it's creating new products. Maybe it's developing a new set of features. Whatever it is, you want to make sure that you start the budgeting process with those milestones and those objectives in mind, because you want to build a budget that's going to ensure, or a business plan that's going to ensure that you achieve all those different objectives. So major objectives, milestones, key assumptions. So you have an idea of what you want to accomplish. You have an idea of how much money it's going to take, or you have an idea of how much money you have. What are the key assumptions? What are your assumptions in terms of revenue? What are your assumptions in terms of hiring? What are your assumptions in terms of market adoption? What are your key assumptions that are going to go into this model that are going to be necessary for you to achieve your objectives? If you have been in business and you have historical financial information, you want to take a look at that historical financial information so you can do trending analysis. So you can say, what have I done in the past? Has that worked? Do we think that that's going to continue? Do we think that's going to change? And then your key variables. So once you create a budget, once you think through a budget, you also want to think about what are the assumptions that could change? And you want to run scenario analysis. What if the market doesn't adopt it as quickly as you think? What if your revenue is slower to ramp than you initially assumed? What if your hiring is slower? What are the different variables that are going to have an impact on your overall market, on your overall model? Okay, so just the major objectives. I talked a little bit about that. Venture funding and negative cash burn, what you want to accomplish with your next raise. And the big thing with this is that you want to make sure that the next raise that you have is going to be at a higher valuation. So every time you're going out and raising money, you want to make sure that you're significantly increasing your valuation And the only way you're going to significantly increase your valuation is if you're able to have major progress with your company and with your product and with your market attack. So every time you want to do a raise, just think about what you want to accomplish. Positive cash burn, no venture funding, just what are the goals that you want to achieve during this period?